Hey traders, Raghee here, and in this free video we're going to recap some of the morning day trades because I think there were some great lessons here, and I will continue to apply the particular approach that I'm going to walk you through right now in this video. So there are three core entries that I look at in the NQ, RTY, YM, and ES every morning, and we call them breaches: the 5, the 15, and the 30-minute. We've talked about these in previous videos, so some of you should be familiar with them. And they're time-based and they're range-based entries that reveal what I call kind of a tip of the hand of the market. Am I getting the market sort of tipping its hand, suggesting what the direction could be? This morning, the 30-minute, what we've continued to focus on, by the way, is the 30-minute breach. Because we're seeing summertime trading, lower participation, lower volume, the market having to adjust to tweets and headlines and so forth, I've been much more conservative about which breach I will even consider taking. And we've really just kept the morning at a 30-minute breach. And so once that happened, you can see here the breach was a short. But we're not taking that breach to the downside as a short, which happened right here. What we're actually doing is waiting for what we call the retreat. And this is where we use things like the volume weighted average price. We use things like value area high, value area low, points of control, and a number of other tools. But we set up a zone that was 75.75 to 75.80. In that zone, we're either buying puts or getting short the NQ. And this includes the NQ, this includes the QQQ. So we're either buying puts in either one of these or just simply shorting either one of these. And that's the zone that we do it in. And then we just really very conservatively, quite frankly, take profit when we can, not when we have to, and scale out. We don't get flat. We scale out as we retest the previous level, and then we go on to see how low is low, how far down could this market go. So it's the retreat here that I really want to emphasize. And this isn't something that just happens once in a while. It's a pretty consistent phenomenon. Let's talk about another setup. And these are both trades. Actually, we set up retreat levels for all four of the averages: RTY, ES, YM, and NQ. And then we wait to see which ones actually fire. So let's talk about the other retreat that we had this morning. Again, same process. We wait for the 30-minute. You can see the short trade triggered here for the 30-minute. This is an automated tool that I give members. It's a free tool for Thinkorswim. And then we wait for the retreat. The retreat we were looking for was as the market closed in on the 26,200 major psychological level. And then same thing, look, I'm not excited about taking that profit. It's just the most responsible thing to do. Move to a break-even stop and then see how much lower is low, right? So the first stop, our first target, T1, is going to be pretty conservative. And then we get much more ambitious with T2 because at that point we've moved to a break even, we've paid ourselves, we've reduced position size. Again, it's all about scaling out. So think about how you're trading in the morning and the kind of volatility we're seeing, the spongy levels that we're seeing, and maybe being a little bit more patient and waiting for the market to tip its hand with more of a 30-minute clearing range breach is going to serve you better. So put this to work, see how it works out for you, and I'll see you in the next update.